One of the 5 stocks that I'm covering today has a 51% analyst upside. Another just signed a $7 billion revenue deal backed by NVIDIA. And a third is so overextended right now that my system is screaming, wait for the pullback. A lot of how I invest is based on looking at stocks with value upside, but with a completely different lens than how Buffett looks at it. Because for me, I like to seek out long-term potential growth in the technology sector. And if you've been following my channel for a while, then you probably know that I like an asymmetrical approach because I invest heavily into those mega caps and then I take a little bit of a smaller calculated risk within those small caps. This strategy is how I was able to talk about Palantir and AppLovin 3 years ago and the top quantum players like IonQ and Rigetti 2 years ago, well before they ever exploded. Today I'm breaking down the 5 stocks using my exact scoring system, the same spreadsheet that I use for my own portfolio. And you're going to see how I evaluate the fundamentals, the technicals, and whether each one is going to be flagged as a buy, a watch, or we're just going to pass right now. But before we dive in, if you get any value from my videos and my spreadsheets, please consider pressing the like button to help my channel grow even further. So I had created a spreadsheet for myself a long time ago where it factors in the fundamentals for the long-term strength and also the technicals for the short-term entry points. I'm taking into consideration the 200-day simple moving average, the RSI, the MACD, the ROC, and the ADX. And I have to point out that these items are never perfect, but they can often tell me if a stock is on trend for a near-term pullback or if all indicators are giving support for improving momentum. And because I'm investing every month, I choose some stocks over others based on those technicals as a form of an indicator. So for today's video, I'm going to cover 5 stocks and I'll show you how I look at them. And I do have to point out that this is not financial advice. It is purely educational. Some of these stocks are suggestions from the viewers and some are from my own watch list. And after each of those stocks, I'll list how they ranked out on a score of 100. And here on the screen is my scoring for each section. And then I also have an indicator on the technicals that tells me if I should potentially buy, watch, or of course pass. And please stick around to the end because I'm going to show you all 5 stocks side by side in one comparison table, including one bonus stock that I didn't cover in detail in the video. You'll see exactly how they stack up with one another and see which of them are being called out with specific signals, and you'll find out if patience is going to pay off. Our first company is Consensus Cloud Solutions with a ticker CCSI, and this is one that was brought up by a viewer, and this company has quietly built a strong position in secure document and data workflows for regulated sectors like healthcare, government, and finance. They started over 25 years ago with cloud faxing, and now they're layering in natural language processing and AI to turn unstructured documents into structured, usable data. They have been recognized as a leader by IDC in the digital fax market, which adds credibility to their claim of innovation and market strength. In terms of growth potential, they are positioned well because so much crucial work in regulated industries still relies on fax, paper, and siloed data. Consensus aims to upgrade that infrastructure with cloud, AI, and other operability tools, meaning the need for their service is going to be ongoing and potentially growing. Analysts list Consensus Cloud Solutions with 21% upside over the next 12 months. And in my scoring system, it lists it as having a strong value and the overall score of an 85 out of 100. Now that is definitely a solid score with an 85 out of 100. But here's the thing. The next stock that I'm covering has a much lower score at a 69, yet it has a 31% analyst upside and a $7 billion revenue contract. So which one's actually better? Let's find out. Now, there's already an industry being upended by AI, with growth in the relevant sectors projected to exceed 100 billion plus over the next decade, and that happens to be defense, security, and commercial drone markets. That's why we're showcasing our sponsor, Spark AI Inc., where this portion is disseminated on behalf of Spark AI, where they happen to be a software and technology company that's building next-generation GPS-free target acquisition and intelligence software. Spark AI's proprietary Spark technology gives drones full autonomy. It is a zero-signature system that allows autonomous vehicles to locate, plan, and move without relying on GPS, radar, or even external sensors, ensuring reliable performance in the most challenging GPS-denied environments. Their flagship platform is Overwatch, and a major breakthrough is the second-generation Spark AI Mobile, which turns field-issued mobile devices into precision nodes, enabling mobile-to-drone target handoffs. This expansion into the millions of field-issued mobile and tactical computing devices across the US, NATO, and allied defense forces represents represents a transformational market opportunity. Spark AI utilizes a scalable business model focusing on high-margin licensing. The stock has been surging in recent days, up over 400% year to date, yet it trades around a tiny US dollar market cap of around $18 million. This positions it as a potentially undervalued microcap. And if you want to find out more for this AI defense leader, check it out down in the description below. Our next company is Applied Digital Corporation, which I've talked about many times on the show. And it happens to be one that I've consistently had a lot of viewers ask me if right now is the right time to buy. And of course, my response is that if you are dollar cost averaging for the long term, there's rarely a bad time to buy, so long as it is a solid company. Now, if you're new to Applied Digital, they are one of the quiet builders powering the AI boom. They're constructing massive AI factories in North Dakota, built for the heat and energy demands of artificial intelligence. Instead of retrofitting old warehouses, they're starting fresh. They're using cold weather, cheap power, and advanced cooling systems to cut the costs and handle high-performance computing loads. And their client list gives them a lot of credibility. CoreWeave, one of NVIDIA's closest AI partners, signed a 15-year lease for 250 megawatts worth of about $7 billion in revenue. They also added another $5 billion deal with a US-based hyperscaler and a contract with Together AI. Plus, Mockery Asset Management is investing up to $5 billion to help fund the construction, and even NVIDIA owns a small stake. Overall, I think that's a pretty strong lineup for a company this size. Their two campuses, under the name Polaris Forge, aim to reach 1 gigawatt of total capacity by 2027. If they deliver on time, they'll be right in the middle of the next AI infrastructure wave. That's why analysts list Applied Digital with a heavy 31% upside over the next 12 months. And in my scoring system, it has a score of a 69 out of 100 with strong fundamental value. Now here is where the technicals really come in. My system flags this as a watch right now because the short-term indicators, specifically the rate of change over 30% and the ADX over 47%, suggests that the stock may be overextended right now. And the translation is that it's had a very strong run, and it could pull back in the near term. So what exactly does that mean for you? Well, if you're looking for a single entry point, then hey, you might just want to wait for a dip. But if you're like me and you're already dollar cost averaging into quality companies, which is my preferred approach, then a small position now and more on a pullback works perfectly fine. Because overall, the fundamentals are very solid. It's just all about your timing for your entry. Before I cover the next stock, I do want to point out that I'm going to have all the stocks at the end listing out a comparison of how they're all ranked. So I do suggest just hanging out for that. Our next company is NICE Limited with the ticker NICE, and they're a software giant helping big companies automate customer service and manage compliance all under one roof. They're best known for CX1, their AI-driven cloud platform that powers contact centers around the world. It's the kind of tool that blends automation with real human interaction. They're helping brands like banks, airlines, and telecoms cut their costs while keeping customers happy. And right now, momentum is strong. At their Interactions 2025 event this summer, they rolled out a new wave of AI tools under CX1 Empower, which brings customer service, automation, and analytics all together. They also expanded partnerships with ServiceNow and Salesforce, baking their technology directly into enterprise workflows, a move that should make it harder for competitors to unseat them. Management doubled down with a $500 million share buyback program and continued double-digit cloud growth, signaling both confidence and financial strength. What makes NICE really stand out is how early they went all in on AI, because they're not just chasing the hype. They've been building towards this for years, and it's now just starting to pay off in stronger margins and deeper enterprise relationships. The company sits at those crossroads of customer engagement and compliance automation, two areas with massive spending growth ahead. Analysts list NICE with 51% upside over the next 12 months, and in my scoring system, it has it with strong value and the overall score of a 78 out of 100. Now, 51% upside, that happens to be the highest analyst projection so far. But the next two stocks that I'm going to be covering happen to be household names within tech, and you might be surprised where they land on my scoring system, because one of them isn't even undervalued right now, but it happens to be a viewer favorite. Now that's 3 down and 2 to go. And just a heads up that when we do get into the comparison table at the end, you will notice something interesting. The stock with the highest analyst upside isn't necessarily the one with my highest score. And I promise I'll explain why that matters when we look at all 5 together. Oh, and by the way, if you're finding this scoring system helpful, let me know in the comments which stocks that you want me to analyze next, because I try to read every single one of them. Our next company is Qualcomm Incorporated, and here's why they're interesting. Everyone knows them for smartphone chips, and that's still 70% of their revenue. But the real growth story is happening in 2 other places. First, their automotive business exploded 59% year over year. They're not just making chips for cars, they're building complete systems called the digital chassis that handles everything from infotainment to advanced driver assistance. In fact, over 30 car brands have already signed on. Second, they just launched the Snapdragon 8 Elite Gen 5 at their September event, and the AI performance jumped 37% compared to the previous generation. And this matters because they're positioning themselves as the go-to chip for on-device AI, meaning that your phone processes AI locally instead of sending everything to the cloud. So yes, Qualcomm still dominates mobile, but cars, Internet of Things devices, and edge AI are becoming real revenue drivers, not just future promises. Analysts list Qualcomm with 8.7% upside over the next 12 months. And in my scoring system, I see it as fairly valued today with an overall score of 75 out of 100. Our next company is United Microelectronics Corporation, which specializes in manufacturing chips using strong, mature process technologies. For example, 22 nanometer and 28 nanometer, rather than chasing only the bleeding edge. This happens to be another request from viewers where they want to know how this company is positioned. UMC argues that while many competitors race for the smallest nodes, the real demand lies in the good enough but cost-efficient chips that power displays, Internet of Things devices, automotive components, and other electronics. And to that point, UMC's new 22 nanometer embedded high voltage platform for display driver ICs reduces power consumption by up to 30% compared to their previous 28 nanometer generation and helps cut die size by roughly 10%. Credibility of this type of offer really shows up clearly in their partnerships. For example, UMC announced a collaboration with Intel Corporation to develop a 12 nanometer process platform as part of Intel's foundry strategy, giving UMC access to global customers and a US manufacturing footprint. Now, because so many devices still need chips built on mature nodes and cost-sensitive technologies, UMC has growth potential in a niche that won't necessarily fade away just because 3 nanometer is trending right now. Analysts list United Microelectronics with 8.5% upside over the next 12 months, and it looks to be slightly undervalued, and it has an overall score of a 78 out of 100. Now that I've covered all 5 of these stocks, you were able to see a range of ones that I might invest in today versus waiting for a better entry or simply pass on it altogether. And here's how they all look on one table. I'm hiding a lot of the individual data points because it would just make it hard to read, but you can see how the number ranking and buy signals are simply directional, but they are never gospel for me. I think we all agree that Oracle will have long-term success, but it stands to have some pullbacks with the ROC being a negative 4% and a high PEG ratio. It's very top-heavy at the moment, and I think that most people understand that. And overall, this spreadsheet is something that I probably will share more broadly to the community next year. That wraps up today's potential undervalued stocks to put on your watch list and research a little bit further. Now, if you do have stocks that you'd like me to research, please just let me know in the comments or respond to my newsletter and I'll take a look at it as soon as I can. And if you're ever curious which stocks I do buy into, you can see them in my portfolio in my free newsletter. As always, thank you so much for watching.